The break, ladies and gentlemen. We now begin with the first session of TIOL Tax Congress titled GST 2.0, How Can Consumption Leg Up Growth in Our Economy? Now, the session, as the title very well explains, will be delving into the GST landscape, exploring how consumption-driven growth can actually fuel the broader economy and the role of policy, compliance, and innovation in this journey. To bring the best out of this, we have a formidable lineup of speakers coming up to be a part of this panel. Please put your hands together as I request the chair for the panel to join us on stage. That is the member of GST CBIC Ministry of Finance, Shri Shashank, Priya. A key architect of India's GST framework, driving policy implementation and strategic initiatives for a robust indirect tax ecosystem. Thank you so much, sir, for joining us this afternoon. Up next, ladies and gentlemen, please keep the applause going, as next up on the panel is the CEO of GST Network, Shri M.K. Sinha, leading India's digital tax infrastructure, enabling efficiency, transparency, and innovation across the GST ecosystem. Thank you, Mr. Sinha, for joining us. Coming up next on the panel, we are very glad to have amongst us the tax head for a luxury automotive MNC in India, Shri Sanjeev Agarwal, bringing frontline industry insights into GST compliance, operational challenges, and the role of taxation in driving corporate growth. Up next on the panel is partner Taxcraft, Shri Rajat Chhabra, a thought leader in indirect taxation and advisory services, providing strategic guidance to businesses navigating the evolving GST landscape. And to draw the best out of the panel, let's welcome the moderator for the panel, Shri Kumar, Managing Partner, Swamy Associates, a seasoned tax and legal professional known for his deep expertise in GST, corporate taxation, and advisory leadership. Ladies and gentlemen, a better round of applause, please, for the very first panel of the Tax Congress. Over to you, Mr. Kumar.
I have a difficulty. I can talk only when I am standing. So please excuse me from the chair and let me conduct this moderation from here. So thank you. Distinguished dais, more distinguished audience. I mean, leave alone the proverbial saying that I am very late at etc., etc. Shail has been one of my contemporary, because we both started in the same year. I started Swamy Associates and he started Tax India. We grew shoulder to shoulder, strength to strength. Today we are 25 years, both of us, before you. He was enriching the tax space and I was getting enriched, thanks to Tax India. Because I would have written more than 500 articles in Tax India in my yesteryears. I have to personally thank Vijay Kumar, my Bhishma, who made me to write. In fact, when I wrote my first article, his criticism was, he quoted Kurian and said, I see an intellectual constipation and expressional diarrhea. That was the first remark. From then onwards, I have tried to live up to his expectations. So thank you, Shail, and congratulations to Team Tax India. 25 years is not a normal journey. I have to say that, be it is in profession like me or in a journalism, it's a very humongous journey. 25 years is a very formidable achievement. Congratulations to the team, and I know what a team is all about, because without a team, this journey would not have been possible, and congratulations to one and all. This moderation is going to be, though the topic is going to be how can consumption leg up, we are going to just a bit deviate and get into some very interesting topics, very interesting points, because getting on dais such a constellation of stars, and that too our CBIC member and Mr. Sinha, who is an architect of GSTN 2.0, that is GSTN 2.0, this IMS which is going to be there in place. Having them on board and having a topic of a general choice, I don't want to do that. So we'll get into the actual points, pain points and gain points of GST 2.0. That's how I'm going to moderate this session. To start with, we are just out of GST 2.0 fever. It is written all over the wall. The whole nation is burning with that word. That is a buzzword today, GST 2.0. And we have, in fact, if I have to be the chairperson of Forbes Power List, I would put Mr. Shashank Priya as the most intellectual power couple of India today. He heads the constitutional pyramid on bureaucracy, and Madam is sitting as a member in Sestat, Delhi, is heading the judicial, and they make the power couple of, intellectual power couple of India. I'm very honored to be here to moderate you, sir. And it's a great honor, indeed a honor, sir. So my first question to be, again coming from drawing strength from this 2.0. With so much of fanfare and hype, this 2.0 is now all over India. Rates have been rationalized, a great move. This is one thing which Mr. P. Chidambaram and me both posted in Twitter, the first congratulatory message on whatever this government has done. If we both can concur, because I'm also known as one of a very critic of the policies, we both concurred that this GST 2.0, this rationalization of rates, as one of the greatest leaps in the taxation regime. No doubt about it. Congratulations to the government and to you, sir, for that. Now, having said that, how we are going to ensure this 2.0 actually reaches the common man? Because this is intended for the common man. That is what the message is all about. How we are going to ensure is the first question. There was a provision, still it is in the statute. It's called anti-profiteering. All of you know that. There is an anti-profiteering section which is available in GST, which says that when there is a reduction of tax rate, or when there is going to be an input tax given to a commodity, it should be ensured that it is passed on to the next stage or to the end customer. But few years back, that section has been numbed, and today it is not operational. Though it is in statute, there is no mechanism, it is teethless. There is no mechanism to enforce it. The enforcing authority has been, is not there in place today. So with no mechanism to ensure that this reduction of tax rate is going to percolate to the roots, it is going to reach the end customer. Without no mechanism, no law to enforce it, how we are going to ensure that it is going to reach the common man? Is it by way, because circulars are there, they are collecting data, etc., it's fine. But how it is going to be enforced? What if I, being a business, going to increase the price to accommodate this tax rate to maintain the same MRP? There is no mandate that the MRP has to be tinkered, it has to be reduced, nothing has come in. There is no law about it. With that being the situation, how, sir, we are going to enforce or ensure that this 2.0 is going to enrich or going to reach the common man? That would be my first question to you, sir.
So first and foremost, let me thank Tax India Online to invite me for this session. And I find a lot of luminaries here. So I extend my greetings and my felicitations to them. And I thank Mr. Jay Kumar for such a, I must say, warm introduction. Now, as far as the question is concerned, let me go into the genesis of anti-profiteering. When GST was being brought in, there was a lot of discussion whether we should have anti-profiteering mechanism or not. Because there was 2 points of view. One is that the market itself will take care of, consumers reaping the benefit of the reduction or the bringing in of GST. And the other was that no, as Mr. Jay Kumar says, there is a risk of profiteering. So we must have in law. So it was in fact one of the last provisions that was formulated and put in the GST. So we were always a little bit hesitant about having a mechanism which would kind of disrupt the market forces. So, and that is why, and it was always understood that this will be a temporary law which is meant to monitor what is happening after the onset of GST. So it was never meant to be a permanent law, and that is why it has been made to be now non-operational. Coming to GST 2.0 and how we are going to establish that the benefits are being passed on to the consumers. So as Mr. Jay Kumar said, we have put in place certain mechanisms. We are getting price data. We are going to examine it pre and post. And it is a whole of government approach. So you would see Ministry of Consumer Affairs also has got a website. It is receiving complaints. Wherever we are also actively pursuing those complaints, checking up with the suppliers. And in some of those cases, we have also clarified to the consumers the reason why, if they perceive that benefit is not being passed on. Plus, if you would have seen, there is an intent has been brought out very clearly by the various segments of the taxpayers. They have brought out their own price list. They have brought out, advertisement in the newspaper. So the ecosystem is very positive that this benefit, which is meant for, for common persons, it should reach them. That is the general feeling, and that is where the trade has also responded in that spirit. So, and we feel that is a more prudent way to deal with it, because if we start anti-profiteering provision, there will be a lot of disputes, and these disputes take their own time to settle down. It creates uncertainties. So best is that the suppliers, the taxpayers themselves implement it, but we are maintaining some kind of a background information base, and we are maintaining some kind of a background, systems in place to see that if it is not really reaching, and it doesn't mean that every individual, consumers we have to satisfy. At a larger, broader plane, if the intent has been shown and it is seen that the prices are getting effectively sort of manifested in terms of what the lower rates of duty. Again, it's very difficult in every case to have a one-to-one correlation. But there should be a manifest reduction based on whatever is the rationalization that has been done. So that is broadly the principle on which we are going. And you would see some of the segments already there is a lot of positivity, particularly my friend sitting here in the motor car segment. Already there is a lot of positivity and a lot of, the boom in the motor car segment. FMCG, there are, again, it has helped. A lot of consumers are happy. There are a few complaints that we are looking at. And as I said, wherever intervention is required, we are trying to do it informally. And we hope that this is how it continues. But if a more, what I would say, formal response is needed at a later stage, that also we would then look at it as and when the time comes for that.
Thank you, sir. In fact, you have addressed, or you have kind of put to rest a possible litigation, I would say a catastrophe which is about to happen. Because everywhere there is, there's a lot of confusion about this anti-profiteering, how it has to be passed on, so many questions. And because of the consumer forums are all now working up, because there have been complaints by the consumer forum also. So I think you have put a very sane rest by saying that, which had been always my conviction also, that this tax rate reduction, the ecosystem, the market ecosystem will itself take care of it to reduce the price or etc. Because we are not in a monopoly market. We are in an oligopoly market where market corrections will happen automatically. So there is no need of an enforcement on anti-profiteering, and which may only lead to a host of litigations. You have put to rest that, sir. Thank you. This was a wonderful response. Now, because you referred to your colleague, the next chair on automobile, I'm also tempted to ask you this question, which both of you have to answer this, sir. See, when this GST 2.0 is intended for a lot of benefits, host of benefits, of course, truly. The compensation cess has been done away with, and at places it has been merged into the basic tax, where 28 has become 40. At places it has not been. But in auto sector, the compensation cess is taken out. Of course, we have a moderated 18%, we have a 28%, we have 40% rather. That's all fine. But what will happen to the 2,500 crores estimated compensation cess paid and kept in books in various points of the distribution, in various points of the supply chain, not from the manufacturer, because there it is outage. From thereafter, it is the super stockers, in the dealers, etc., etc. That is what is the estimate is. It says that 2,500 crores of compensation cess, one fine day, you say it lapses. I agree, because it is a linear credit, it can't be cross-utilized, because it is meant for, all cess is for a purpose. Education cess is for education, automobile for automobile, agriculture for agriculture, I agree that. But one fine day when you are going to do away with compensation cess, and when you are also going to increase it by a part sandwich to the basic duty, and having 2,500 crores of compensation cess, is it not going to increase the cost of the vehicle? Rather, our claim is it is going to decrease the price. 2,500 crores is a huge money we are talking about. Is it not like we had earlier instances? Once when the government said no more credit, it went to Supreme Court in Eicher Motors. When there was an excess accumulation, they said all the accumulation will go off. It went to Supreme Court said no, it's a right. Thereafter, when we had cess, we had education cess in the excise regime. When cess was taken out and it was sandwiched to the basic excise duty, when 12 became 12.5, these two credits were allowed to be utilized against basic excise duty. So, by making this compensation cess a dead weight today, by saying that there is no going to be a compensation cess further, are we not loading, or is it not a bit unjust? Because it has been paid, duly paid to the government, that is, one day you are taking it away, is it not going to add cost to the manufacturers, rather the downstream also? So will it not be against the basic anthem of this GST 2.0? Should we not give credit? Maybe, if not once, maybe you can defer it, and capital goods credit you gave it in 2 years. You always split it and gave it in 2 years. Likewise, you can fragment it and give it to us in 4 or 5 years, or maybe max 10 years. But saying it is no, it will lapse, is it not against the basic spirit of this GST 2.0? And how my friend Sanjeev, who is sitting in the industry, is going to take it? I want your views from Sanjeev and thereafter too. How do you take this, sir?
At the same time, you know, you are right. This is a cost. This becomes a cost if it is not somehow gets absorbed by the by the government, or if we are not given refund of it, or you know, you don't get a chance to pay your normal GST liability through the accumulated compensation amount. So obviously, you know, if there is no such mechanism available, the dealers are going to, you know, they will be forced to somehow give effect of it in the pricing. May not be now, but as you know, sir already mentioned that auto industry has really responded well in this regard, and we see almost every day in the newspapers that the GST cut is transferred to the customers, so they are getting benefit of it. So that is true that industry has actually followed immediately as the government announced these rate cuts. But yes, this is a topic of concern. As of now, it's open.
Sir, can I have your views?
I have 2 points to make on this issue. One is that compensation cess was always meant to be, at some point of time, be lapsing. So industry would have had already a roadmap to see how compensation cess will get used going forward. Only thing is it has been a little fast track. Now, there are 2 options for the government. One would have been that we refund it or allow it as credit. But we have to also be mindful that government has already given up so much of its revenue. So again, for the central government to take this additional burden, it would be hard on the government to take this additional burden. So obviously it's all a matter of, you know, how much of revenue hit we are willing to take. So you having mentioned that it is a legitimate concern, but one has to also balance the government's concerns for the revenue. That is number one. And number two, I must say, and which I have said in earlier forums also, we have always been partners, industry and government. Both of us contribute towards the welfare of the, you know, society. So why should we not take it as a contribution of the industry towards GST 2.0? Why don't they absorb this cost and not pass it on to the consumer? So that is the spirit that I would like to urge the concerned industries to adopt. Thank you.
Sir, now I'll go to the Rahul Dravid of... Sir, you have earned a new name in South India as the Rahul Dravid of GSTN. Your composure, the way you coach, you've taken up in a very crucial stage of GSTN, in a very crucial stage. And of course, you are as handsome as he is. So, you are the new Rahul Dravid of GSTN for us. That's the nickname for you. Sir, I will toss up with this. The new IMS which is going to come up, revolutionary, which should have been, like everything is going to be, I mean, it's very promising. GST 2.0 is late, but it's very good. Likewise, IMS is a bit late, but it appears to be very good. We are all in the same page. Originally, when GST was conceived, it was conceived completely on a digital ecosystem or an environment where we wanted a GSTR 1, 2 and 3 in place. Had 1, 2 and 3 been in place, maybe I should have gone for an alternate profession. But fortunately, it wasn't. It went to 1 was 1, intact. But 2 became 2A and 2A became 2B, and now this IMS is going to put it back to the roadmap in towards GSTR 2 is what is coming to my mind. You have to amplify that. I think this is something which is not a reverse gear. It is to put back us into the right path, which we were originally planning and intended for. So this IMS, we all, this fraternity, as a representative of my fraternity, I congratulate, I appreciate that this is a right move. Now, just clarify whether we are moving towards the original GSTR 2, and if that be so, if GST 2.0 can bring this IMS and thereafter this GSTR 2 in place, when is GSTR 3 is going to be in place? Should we wait for GST 3.0 for that? Because that only will make all the cup of woes which is surrounding the GST is only when the day GSTR 3 became manual. So, is there a roadmap for us that we are moving towards actual GSTR 1, 2 and 3, which was the original? On this I want your views, sir.
Thank you very much. I always know that you are going to throw a googly, and that is why you are tracking me with all kinds of comments. So, coming to the question of GSTR 1, 2, 3, please note that GSTR 1, 2, 3 does not sit in law anymore. Thereafter, a new return design had come. Section 53A was brought in the law. That is also not in the statute book anymore. What is in statute book is GSTR 3B, GSTR 1. Now we have also introduced GSTR 1A by way of a rule. IMS is at present IT facility, and IMS eventually will come in law also. That's a way of ruling out that we are allowing industry to get used to the idea. Why GSTR 1, 2, 3 was not done? That was because between GSTR 1 and GSTR 3, there would have been too much of data exchange between department and taxpayer. Multiple compliances to be done in 10 days, and the industry clearly had said that so much of compliance within 10 days of 10th and 20th of every month is impractical, and that is why GSTR 3B, which is a summary design which was used to launch GST in India. GSTR 1 also in the first year was a return which was only 40% filed. So it is a process of evolution wherein we are trying to do two things. One, on the liability side, ensure that every invoice B2B is reported. Down the line, certainly we will also digitize B2C and capture it. So if you ask me end state, I will say end state, all transactions B2B and B2C digitized. At present, we are focused on B2B because it is a federal tax, it's a destination-based tax, credits must flow to the destination state, therefore B2B is in focus. The second focus is on the buyer side, that the invoices must undergo a handshake. That means between the buyer and seller, there is an agreement that this is my invoice. And then the ITC is taken based on a handshaken invoice. So IMS will achieve that, and rest assured that government will implement IMS. A certain phasing has to be done. At present, we had so much of GSTR 2.0 happening. So this IMS also will have its time. It is for the policy makers to take the call, and what it will remove is the largest number of notices today, and you must be aware of it, is on mismatches, both on the liability side as well as on the ITC side. So IMS will remove most of the notices on the ITC side if you have ensured that you have followed the IMS trajectory for availing the credit. At present, it is available to be voluntarily used, and I will encourage industry to use it voluntarily so that your mismatches do not exist. We are also providing for corner situations of keeping the invoice pending. Credit notes can also be kept pending. So all the issues which the industry has raised, we are trying to address. As far as GSTR 1A is concerned, it is a method by which you can do your correcting entries of GSTR 1 before you file 3B. Therefore, on the liability side also, the equation which will become is the liability in GSTR 1 plus the correcting entries in GSTR 1A will be the net return to be filed in GSTR 3B. So on both liability as well as on ITC side, what is being attempted is that mismatch notices are removed from the equation. And that will be helpful not only to the department but also to the trade.
Thank you, sir. GSTR 3B continues to be a menace. Why? Because there is a provision under section 16 which says you can avail the credit only if your your supplier has paid the tax. Not only paid the tax with proper currency. I am still at awe and despair how to go into his kitchen and find out how he has whether paid, and that too when the manual float, on a manual float, he files GSTR 3B. If 3 is in place, if it is automated, if the currency is validated, then I would not have been, because I am handling tons of notices where the main allegation is your supplier has not paid the tax properly. Either he would have filed the return, but because it is a manual interface till date, we don't know whether he is using the right currency, whether he is using a wrong input tax credit, nothing is known. But that is being cast under section 16 as a very important condition for my entitlement of credit. So, the day, my dream, someday, if this is going to be ironed out, this was there in Sunvat credit also, but then they brought a provision that you cannot be, because I have paid the tax, I have received the goods, I have utilized it for my final supply, I have ensured within 180 days I have made the payment along with the tax to the supplier. All conditions are it is within my reach, or I can decide it. I have ensured that. But what he has not done it, with a proper currency, is coming and hitting me at the last, and there is an allegation that I should not take the credit, is seriously hitting the industry on all walks of the trade. Even very, very established corporates also having this difficulty. So that is why my dream would be someday GSTR 3 is in place, where that validates the payment, a proper payment, and at least at my end, I will only be subscribing, I will be only responsible for the deeds which is in my belt and not for my suppliers.
No, on this, see, once GSTR 1A comes into place, all invoices of 1 as corrected by 1A is what will be in GSTR 3B, and no further amendment in GSTR 3B will be needed because your amending document is 1A. So the condition thereafter will be all invoices reported in GSTR 1 and 1A are fully tax paid. The visibility which you are wanting will become effective the day government decides to not allow amendment of 3B on liability side and make GSTR 1A mandatory.
True.
So that's the next piece which will be done, which will solve your problem.
Wonderful, sir. I'll become, my cases may go, but I'll be a very happy person to do that. Okay, now I'll go to Mr. Rajat, who is from my clan, because we have bureaucrat chief, we have GSTN chief, and we have an industry. He represents my clan, the advocate and the consultant fraternity. So we'll start with a relevant question for him. Sir, GST 80, which had been a dream for many, has now taken shape. We are seeing a light in the end of the corridor. Hopefully, everything is falling in place. If all converge, I think it should be in place. But still, I have my doubts. I'm not pessimistic. I want it to be definitely in place. But what I'm not sure is, because this is an arrangement between the state and the center. It is going to be a marriage of, I would say, a fish and a frog kind of relationship which is going on. Or I'm not sure whether the states have recruited. We have seen the judicial members have been recruited. We have seen the center technical members from the CGST front have been recruited and they are in place. But I don't know whether the state, because no state has published till date any of the list of their members. I don't know whether it is, in the back burner it is, the cooking is happening. I don't know. My wishful thinking is it should happen. This is one. Second is about the infrastructure. We don't know where because it is all integrated through internet and everything, because this is a new age tribunal. That is what it is claimed to be. That being so, whether a robust networking is also very important. Whether we are with the infrastructure is also we don't know. So the two fronts, judicial member, yes, technical member, yes, CGST, SGST, no idea. infrastructure question mark. With this ecosystem, still we are hopeful that it will be in place because they have made the last day to file the appeals on 36th of 2026. My worry is there is a pre-deposit of 10%. So I have to be very concerned about it. Now, sir, as I said, my Bhishma Vijay Kumar wrote in a jest. Is it not, he referred to a president's note on the date of inaugural, where it was said, around 4 lakh pending cases. The GST tribunal is coming to the fore with 4 lakh pending cases. 4 lakh pending cases, he even did the math, a beautiful interesting math he did, and he found out somewhere it will take some 15 years for us to reach the currency. We saw that in tribunals. Tribunals are a very effective mechanism, a fantastic resolution mechanism, no doubt about it. But with its own pace, the inflow is so much. He said it should be 15 years to meet the currency. Now, if that be so, having my pre-deposit of 20%, with humongous demands, and now penalty is also imposed with 10%. Earlier it was not there. We have seen in GST unprecedented penalties unprecedented crimes are also there. I have to confess that. Corresponding penalties are also humongous. We have seen 100 crores and 80 crores and 20 crores penalties are there. Of course, it comes with the limit. Still, 20% lot, 15 years in wait. Where are we heading to? Is this a resolution mechanism? Is it a curse or it is a blessing? That is something which is always bothering me. So, Vijay suggested in his column that why not a Samadhan scheme? Why not a scheme like what we had in SVLDRS when GST came into, GST was in place. They have a wonderful scheme called that Samadhan scheme for service tax and excise. It came. It had an extraordinary reception. I myself, from a small firm in India, we settled around 1,680 crores of demand in that scheme. A small firm. We advised the client, and our clients settled 1,680 crores in that scheme. It was so, it was a very, very interesting, and it was grounded scheme that came with a waiver of interest and penalty, and also a very fascinating for some 60% and 50%. Now, whether a scheme should come in place, because we are now after 8 years, tribunals will take 15 years, pre-deposit is 20%. Do you subscribe to Mr. Vijay Kumar's views that there should be a very, very grounded real-time scheme should come for one-time GST scheme, which because in GST we have seen only schemes where you have to, whoever has missed the bus of filing an appeal, they gave a small scheme where you can pay some 2.5% extra and you can file an appeal. That was one I saw. I mean, other than that, there was not much of GST Samadhan scheme. Are we not entitled for a scheme, a one-time waiver scheme? What would be your take on that? And thereafter, I want a reflection from our member also on this. Is it not on a good, will it not take us into the right path? Your views, sir, please.
Thank you so much. So, 2-3 points I want to touch upon so far as the birth of GSTAT is concerned. Number one, there I durust hai, it ought to have happened somewhere in the year 2019 or 20. While an initial attempt was made wherein a disproportionate representation of technical and judicial member was being envisaged to begin with, which was struck down by Madras High Court. But so far as GSTAT is concerned, now they have pronounced, and the rules have also come, that in next 9 months, in a staggered manner, the filing of the GStat will take place. All the past pendency, the filing shall take place. And in 6 months or so, we will see, as it appears, operationalize GST as well, GStat as well. So far as the count of members and appointment is concerned, which you did touch upon, the current numbers are that, on a holistic basis, we are looking to recruit to appoint 116 members, for 31 states plus one principal bench, which are to be, seated at 45 places across the country. So out of 116, 85 members, judicial plus technical from center have been appointed. So far as 31 members from state is concerned, of course, we would want to believe that, some homework and hard work is being done behind the closed doors, but we are yet to get any information in the public space. So that is on the number of members. So far as, infra and admin staff is concerned, be it Maharashtra, be it Delhi, and in other parts as well, we are hearing very less voices so far as preparedness on infrastructure is concerned. So that definitely is something that, CBIC needs to clarify as to what is happening on that front. So far as administrative, members are concerned, staff is concerned, one hears that, some bit of homework is happening at the background, and they are also being recruited, the registrar, and the other team, which shall take care of the filing, so on and so forth. So far as the pendency is concerned, of course, we are looking at a staggering number of, in excess of 4 lakh matters already being piled up in next 9 months, and which, you rightly suggested, if we do the mathematics, even if one member, instead of, 4 member bench hearing one matter, even if one member were to hear one case each, it will take at least 8 to 10 years, if not 15, if we were to go into the mathematics. But that taking into account that no new addition is happening, which is unlikely to happen. So therefore, in order to, liquidate only the matters, dispose only the matters which are in excess of 4 lakhs today, it will take anywhere between, 8 years to 10 years. So keeping that in perspective, the suggestion of amnesty is a welcome, suggestion. So, in the past, we have had few schemes under excise, Vivad Se Vishwas Tak was another scheme, under another tax law. So these schemes will do a world of good so far as, reducing this pendency is concerned. That's one. Second suggestion is that, of course, at each bench, we are envisaging that there shall be 4 members, 2 technical and 2 judicial. So, there have to be rationale put in that, for certain cases up till certain monetary levels, 1 member bench should also be constituted so that an early disposal of these matters can take place. Number 2. Number 3, can we really think of something called a DRP, what we have in income tax, dispute resolution panel, Let us say we are talking about classification matters, which are very, very intricate, which are very, very comprehensive and difficult to, take care of and dispose of. So if something on these lines can be done, and there could be an alternative mechanism in the form of DRP, which can, take care of disposal of such critical matters, that will, again do a world of good. Apart from this, suitable clubbing, tagging, of matters will also be very, very essential. For example, I'm an, automotive manufacturer, and a similar matter is there, in 4 states going on. If that one matter is being taken care by, say, Tamil Nadu, then, there should be enabling mechanism wherein all 3 should, take cognizance of that, and, there should be uniformity in decisions as well. So these are, initial 3-4 thoughts which, comes to one's mind when it comes to taking care of the pendency and liquidating those, in the smoothest and timely manner.
Thank you, sir. Thank you. And my math of 15 years, or Vijay's math of 15 years, has one exception. If you are going to have members like Mr. S.K. Rahman, whom we are having in dais today, it will be 15 months only. I know the speed at which I have, last meeting itself I said, 2 Rahmans are very popular in Tamil Nadu. One is A.R. Rahman and the other one is this. Both are known for their extraordinary songs and extraordinary deliverables, and we are looking forward to you, sir. And with him on bench, I am sure that the number of disposals, he is going to defy the mathematics. So, before we conclude this wonderful session, I would like to go back to member with his last question. Very small, short. Sir, I even said this in chamber. When GST was introduced, it's a good tax, no doubt about it. Prime Minister said it is a good, simple tax. When it was introduced, it was a tax. Nobody had any clue about it. It was GST 1.0. It was a tax out of the three. Now this GST 2.0 has made it into a good tax. No doubt about it. But now the question is it a simple tax? The one missing block is, out of the vision which this was introduced, when the button was pressed on that midnight, it was a good simple tax. Tax was there. Now we have achieved it's a good tax. Now, maybe in GST 3.0, it should be a good simple tax. Having you at the helm of affairs, I'm very sure, and also my Rahul Dravid in the GST and as a head coach, I'm sure that we will be definitely achieving this. And your last words on this, sir, I would like to have this happen, this simple tax, making it into a good simple tax when you are there at the helm, sir.
No, thank you for the question. So you are very right, there is a scope for much more improvement in the GST architecture. And our effort has been twofold. One is areas which are of dispute. We should look at the law and see how we can modify it, change it, or clarify it. So, for example, you would have seen intermediary now provision, place of supply for intermediary. We are deleting that provision. So that was prone to dispute, so we have done that. Earlier also you would have seen there was Rule 9610, where if some part of the taxes have been paid through advance authorization, then the entire refund was denied. So we have deleted that. Going forward, again, we are examining issues which are prone to dispute. And as you know, Schedule 1, there are some areas which are prone to dispute. Input tax credit block 17.5 are prone to dispute. Then we have some of the procedural issues which are also prone to dispute. So we are looking at how we would address it. As you say, GST, there has to be a GST 3.0. But whatever the time for that is there, but we always believe in an incremental improvement. So we are looking at all these issues, and we are hopeful that going forward, we will make the processes more simple. So one of the effort is that e-invoices, they should be made more universal. They should be made simpler so that we can reduce the threshold further, and we can make that as one point of data entry, and the rest of the things follow that. So make it simple so that everybody takes to it, and then already we have the provision that from GSTR 1, it will go into GSTR 1, it will go into your e-way bill, and from there it will be your returns can be generated, and all those compliances can be done. So that is one area that we are looking at. Second, as you would have seen, processes which take time. We have allowed for now 90% refund of inverted duty structure, though the law has not been brought in. We have made it system driven, that low risk, no officer's intervention barring minor limitations. Registration, we have again made it system driven, and we have given certain limits up to 2.5 lakh. If you are proposing to pass on input tax credit in a month, it will be automatic registration. So effort is to use technology, use risk analytic tools to see that processes become simple and it becomes amenable to use by all segments of the taxpayers. So these are, going forward, we are hoping that, maybe like income tax, we will also make refunds automated. So it's all there in our mind. How do we go? What is the time frame? That may take time. It will have to be, consultations have to be done, adequate guardrails have to be put. But there is a lot of positive energy in the government to take our reform agenda forward, and systems which are creating problem need to be solved so that we make it more and more simple to reach whatever is your benchmark of simple.
Thank you, sir. Thank you, sir. It has been a pleasure to host. We are running out of time. It would be going on and on with such a dignitaries on the dais, and I think it's time to wind up because others have to do the sessions. I've already got my reminder. Wrap it up. Thank you. I'll do that. And it has been a very, very wonderful session with you, sir. The best part is no question was evaded or avoided. You addressed everything point blank. Fantastic response. It has been one of my greatest moderations. Thank you, sir. Thank you, Shail, for giving me this opportunity. Thank you, one and all. Thank you.
A big thank you to all the panelists for diving deep into their years of expertise and sharing these insights with us. And thank you, Mr. Kumar, for bringing the best out of the panel. Can I request all of you to come in the front for a group photograph, please? While I request Shikhar from TIOL to please join us on stage to present our panelists with small tokens of appreciation from our side. Shikhar. Thank you all. Thank you once again. A big, big round of applause for that very, very engaging panel to get this.